Hi there, good afternoon. You're watching the Mutual Fund Corner. I'm Mangla Malu. With me is Sumaira Abidi. Like every Tuesday and Thursday, we answer all your mutual fund related queries. For the markets, well, it is hovering around the 20 as well as the 50-day moving average. The 200-day moving average is close to around 10,857. The frontline indices, all of them pretty much ho-hum as we speak in a very range-bound consolidation. We're getting in numbers. We got in good numbers coming in from NCC. The revenue as well as the EBITDA and net profit beat estimates. That stock higher as we speak, higher by about 2%. And just before NCC reported the numbers, we had Hindalco also reporting their numbers, where the copper business seems like there was a bit of a miss on the copper EBITDA. However, most of the numbers were pretty much in line with what the street was working with. For NCC, remember, the stock is mildly off the high point of the day. The margins have been unchanged, but as compared to what the street was working with, they have been better than expectations. The mid-cap index is in line with the frontline indices, but the advanced decline still mildly in favor of the declines. We have 1,200 stocks which are in the red as compared to 900 which are in the green. First up, all the top stories, and then we hand it over to Sumaira, who's in the mutual fund corner. Key indices ranged. The Nifty trades below 10,900. IT biggies, they're under pressure. Reliance, however, bats for the bulls. The mid-cap index mildly in the green. Government announces plans to sell up to 3% stake in Axis Bank held through Suti. Seeks to raise around 5,300 crores via offer for sale. The stock is mildly lower. Hindalco sees a modest spike after posting its third quarter results. Aluminum business performance is in line with the street estimates, while the copper business is a mild miss. Sun Pharma picks up pace ahead of its earnings as the street expects a pickup in the company's revenue. Commentary from the company will be closely watched. Coal India likely to post a good quarter driven by improved realizations. Bata too may post a good set. All right, let's get going with the markets. Then we have Sun Pharma, which is in focus ahead of the results. Remember, for all pharmaceutical companies, the important part this quarter would be to watch out for the margins and the US business. Margins expected to improve. So that is something that the street will definitely be watching out for. For Sun Pharma, additionally, there had been a bit of a hullabaloo with regards to some corporate governance whistleblower issues. So any commentary from the management on that will be keenly awaited as well. Remember, we have about 2 hours, 1.5 hours rather, to go before the markets close. Let's see whether the company comes out with its results during the market hours or not. Apart from that, we have a couple of individual stocks that are buzzing, some of them at the low point of the day actually. From the mid-cap end of things, we have Godfrey Phillips, which has suddenly slipped to the low point of the day. But with that, it's time now to hand it over to Sumaira, who's joined with a guest. Sumaira.
Mangalam, thanks very much for that. Feroze Azeez of Anand, Rathi Financial Services joins in now as my guest this afternoon. Hi, Feroze. Good to see you again. Let's get started because we have a lot of queries to actually get through today. First up, we have a caller, Ankit, who's on the line with us from Chennai. Hi, Ankit. Good afternoon. How can we help you?
Yeah, hi, Sumaira. Good afternoon. And hi to Feroze as well.
Go ahead, Ankit.
Yeah, so basically, I've already dropped in my portfolio details.
Right.
So I got 3 queries. The first one is definitely, that my portfolio assessment. And the second query is regarding, I have a investment in Reliance Small Cap. So I'm not sure whether I should continue this scheme or I should reduce the amount of investment and I can move the additional amount to any other fund.
Okay.
And the third one is related to, I want to do an additional investment of 46,000 in an ELSS for ATC purposes.
Okay.
So I have chosen between two. I have to choose between 2 funds.
Okay. All right. So let me get this right. You have the Kotak Standard Multi-Cap, the Reliance Small Cap, like you mentioned, Canara Robeco Emerging Equities, as well as the Aditya Birla Sun Life Tax Relief 96. You're now looking for 2 more schemes. One for ELSS. Secondly, to figure out if your portfolio is along the right track. And thirdly, you're worried about your exposure to the small cap fund, right?
Yeah, correct.
And you're looking to invest for how long?
My horizon is like 15 to 20 years. I mean, I don't have any short-term goals.
Okay.
So,
and anything specific that you need the money for at the end of 20 years? I mean, what's the corpus you're looking to collect?
basically, I'll go for, a home after 10 or 15 years.
But how much money would you need, you think?
Maybe like 2 to 3 or 4 crores.
2 to 3 or 4 crores is like doubling. But anyway, let me hand it over to Feroze. Then, Feroze, you've heard Ankit out. How can we help him best?
Yes, Sumaira, I think your questions were rightly guided to establish the fact that more planning is required. You need to make sure that you clearly know where you wish to go and then chalk out a plan to get there. Okay, without knowing where to go, it's like sailing without a compass. So point one, like Sumaira indicated, get your goals in order, point one. Point two, when it comes to your portfolio, which you've shared with us, you have asked for an ELSS scheme, but you've also said that you're investing 8,000 rupees a month in an ELSS scheme. That automatically becomes almost a lakh rupee invested per year. So another 46,000, you have to make sure whether you are overshooting the 1.5 lakh limit. So if you've already utilized the 1.5 lakh limit using different investment vehicles like EPF, which is a large portion of one's ATC, don't invest more in ELSS unless you've exhausted this limit. That's point two. In that category, you can definitely look at Access Long-Term Equity, which to my mind has been very well managed irrespective of the size of the fund. It's the largest fund in the ELSS category, but bottom-up stock picking has certainly helped Access generate alpha, and it should continue to do so. With respect to the rest of the funds which you own, I think you should continue with them, except Reliance Small Cap. You should move Reliance Small Cap to HDFC Small Cap. To my mind, in the small cap space, a fund manager is a very, very important, integral part of your success. I think Chirag Setalwad is one person I would bet my small cap money on. So transforming your Reliance Small Cap to HDFC Small Cap will be able to, it should be able to help you reduce your risk and still have the return right up there. So that's the minor modification you have to do, Ankit.
Feroze, one more question, on this ELSS. I mean, since a lot of people are still looking to do this last-minute tax saving, do you deduct the EPF amount and then invest the balance in ELSS, or is it advisable to just go the whole hog and use the entire limit, possible?
See, ATC already encompasses different instruments. Some of them are voluntary, some of them are involuntary, and they get deducted. EPF being one of them, where you don't have a choice as an employee. That's going to get deducted either which way, like it or not. So point one, you should exclude that limit and only look at the differential. For example, if you've already invested 75,000, including all the 12-month installments of the Provident Fund, Employee Provident Fund, only the 75,000 will get you the tax break. Any further investment will not give you the tax exemption. So it's pointless, to my mind.
Okay, up next, we have a query coming in from Sumedh Ganu, who's on the line with us from Mumbai. Hi, Sumedh. Good afternoon. How can we help you?
Hi, Feroze as well. I'm a big fan of yours. And my question is on portfolio diversification. And I intend to have an SIP of almost 2 lakhs per month. So, and I have chosen two, let's say, good performing funds from each category, and I have about 8 funds in the portfolio. Could you please advise me on that?
Okay, can you help? I know you've sent us the details, but for the benefit of the larger audience who's also listening to you and perhaps may have a similar query, do you want to just quickly run us through your portfolio?
So I have one large cap SBI blue chip and 2 large and mid cap Mira Asset and Principal Emerging, and 2 multi cap, which is Aditya Birla Equity and Motilal Oswal 35, and 3 small caps, Reliance Small Cap, Franklin India Smaller, and LSD Emerging. And I've given the reason of choosing more than what the normally experts suggest, to have maximum 4 or 5 funds. So I would like to get views from Feroze.
Okay, so a couple of things, Sumedh. One, of course, is that you've started off with a big, investable corpus. So that's good because that'll help you accumulate a larger corpus at the very end. Do you have a fixed plan of what you need this money for and when you're going to need it? I mean, what is your investment goal?
Yeah, the goal is actually wealth creation. And I have about 20-25 years to continue my investments. I have taken care of my short-term goals and also goals related to house and retirement, etc. So this is more on wealth creation.
Okay, Sumait, well, you're almost too good to be true as, an ideal investor almost. But Feroze, the one question is, the first question rather is how much diversification is too much diversification? So, between Sumait and his wife, I think they have about 8 funds. Is that okay? Is it fairly balanced? How does it look, the portfolio?
Yes, I think, Sumaira, point one is diversification statistically is said that 7 to 8 funds are good enough. Beyond 7 to 8 funds, then you're doing over diversification. The reason being because all of these monies which you're spreading optically across different asset management companies and different fund managers is going to be converged back into the equity market. So there is going to be intersection between one portfolio and another. But that's point one. Point two, Sumit has done a fairly good study and has invested in 4 categories of funds. And I'm glad that he's conscious about the different 4 categories, which he mentioned: large, mid, multi, and small, which brings down the intersection to a certain extent, because you're not cluttering all your money in one category. That's point 2. So to answer your question, Sumaira, 7 to 8 funds statistically prove to be the right amount of diversification, beyond which risks don't come down as mathematical measure, but the return certainly starts tapering out. So you are actually being inefficient after you have crossed that border, because if 7, 8 can't manage your equity money, then it's time for you to replace 1 or 2 of them rather than add more to that list.
Okay, that makes sense. Sumait, you also had a query on the DSP small cap?
Yeah, and I also wanted his advice on the construct of the portfolio and whether the schemes selected are good in his eyes. And I've done a study also on the overlapping of the individual schemes with each other, and I find it to be around 50%. Okay. Overlap.
Feroze, is the portfolio itself okay? I mean, the schemes that he has selected, any rejig required there?
Yes, there is, but I think it's inspiring for every other viewer to learn that you have to be on the driver's seat when it comes to your investments. I think going up the learning curve is something which every investor should aspire to do, like Sumit is. Point 2 is, yes, some schemes require a change. SBI Blue Chip Fund, managed by Sohani, definitely requires a change. In that same SBI category, I would definitely look at an SBI focused equity, which is expected to do well, not just from the rear view mirror, but from a prospective basis. Principal emerging equities, I would not be very keen. As a matter of principle, Sumit, I think you should not go into asset management companies which are beyond the 6, 7 large ones, at least for your equity management. And you should try and revolve your money around the top 6, 7. You should also, to my mind, exit Reliance Small Cap and Franklin India Small Cap Fund as well, because their standard deviations, which is a risk measure, are significantly higher than Nifty is. So if you have risk management has a role to play in money management, then definitely these 2 schemes wouldn't figure in my recommendation. You can definitely hold on to Mira Asset Emerging Blue Chip Fund, which is a good fund, and Aditya Birla Sun Life Equity Fund is also a great scheme to continue with.
Okay, Sumait, anything else we can help you with?
No, I think thanks a lot, and great fan of yours, Feroze. Thanks for answering my question. Thank you.
All right, Feroze, that looks good. All right, we'll take a very quick break. Up next, we'll have lots more queries for you. But before that, here's a quick reminder. If you too need advice like this, then do remember that new DTH rules are in play. They've come into effect on the 1st of Feb. So to keep watching India's #1 English business news channel, CNBC TV 18, just call your cable or DTH operator and ask for the channel at only ₹4 a month. Hi, welcome back. You're watching the MF Corner. Feroze Azeez of Anand Rathi Financial Services is our expert who's helping our viewers actually navigate through their mutual fund queries. The next question that we have is from Naren Khemani. He's written to us from Mumbai. So Feroze, he's 45 years old and he calls himself an aggressive investor. He says that, he has seen several market cycles and is able to stomach the risk. And he has quite a detailed portfolio actually. So in mid-2017, he has actually chosen to park some of his money as lump sum in 4 funds, which is the Kotak Standard Multi-Cap, the SBI Blue Chip, the Aditya Birla Sun Life Frontline Equity, as well as the HDFC Balanced Advantage Fund. I think together in all of this, he'd have close to about 30-40 lakhs odd, and he plans to keep it intact for 12 years. So actually his goal is his children's education, which is about 12 years away. And for this, he is also planning to augment this lump sum that he has with some SIPs starting now, which will total to about 2 lakh rupees a month, which is the UTI Nifty Next 50, the Mirae Asset India Equity Fund, the L&T Mid Cap, Kotak Emerging Equity, as well as the HDFC Small Cap Fund. The amount that he's looking for is about 10 crores, which he plans to accumulate over the next 12 years. You think he's on track?
I think, Sumaira, you're right. He has a very elaborate portfolio, and I think it's evident that he is a seasoned investor, point one. Point two, is he on track? Currently, he will have to expand his systematic investment plans corpus to be able to get to the 10 crore number in the next 12 years, because 2 lakhs a month, his capital would be close to 3 crores, and that will require some degree of increase in the SIP amount for him to be comfortably reaching his target. Point two. Point three, in his schemes, the four lump sum schemes, which is Kotak Standard Multi-Cap, he should continue with it. SBI Blue Chip, I've given an exit on it for over the last couple of years. I have been recommending an exit on this. I think it's not just important to buy the scheme at the right time, also try and infer when has the scheme maxed out its potential, is generally when the stocks have remained static and they've run the rally. So SBI was a good scheme. SBI Blue Chip is what I meant. It was a good scheme. I don't think it has a very good future prospect because it's got into a redemption cycle, and that'll hamper the performance further. So exit that fund. ABSL Frontline Equity is also an exit. HDFC Balanced Fund, I think if you're a seasoned investor, investing in a balanced fund doesn't make sense because you're going to pay an extra fee on the debt portion and you're going to pay an extra fee on the equity portion. Just separate them two, and the returns could go up by 2-3%. Under the same HDFC basket, if you separate them, you will get 2-3%. So that's my piece of advice on your lump sum investments. Then moving on to your SIP investments, you should not look at the index funds. Your SIPs are doing well, and I think you should continue the schemes. Index funds, I particularly believe that in India, another 6-8 years of extra return can be generated by active management. So we are a little away from going to a passive strategy, especially not the index, which is Nifty, which over the last 1 year has been the best performing index. So you might not be buying it at the right time. And secondly, you're not even wanting the alpha, which can be generated from the fund managers, which has not happened over the last 1 year. But to conclude that it will not happen in the future might be an aggressive hypothesis.
All right, Feroze, thanks very much for that, Mr. Khemani. I hope that advice works for you, and I hope you were listening in. Feroze, as always, thanks very much for dropping by. We'll wrap up on MF Corner, but do remember to email us any queries that you may have, and we'll address them with our experts. Stay tuned. Closing bell comes up next.